Welcome to the Financial Freedom Podcast with your host, Lorna Poole, sharing the secrets to creating wealth, investing, and that all-important money mindset. To find out more and accelerate your journey to financial freedom, head on over to www.lornapoole.com to get started. Welcome, everybody. Welcome to the Financial Freedom Podcast. Government shutdown. Could this slow the economy down? My guest expert today, Eddie Ghabour, is the co-owner and managing partner of Key Advisors Group, LLC. Has a degree in economics and finance. In 1988, Eddie began a successful career in financial planning. Specializing in money management, Eddie also focuses on retirement estate planning strategies for his clients. He works with local CPAs, attorneys, implementing tax saving strategies to help clients protect their hard-earned assets from unnecessary taxation. Eddie, great to have you here.
Thank you so much for having me.
The government shutdown, what was that all about, and why do we need to be concerned?
Well, I think from an economic standpoint, when you have, a 30-plus day shutdown, that's a lot of money not circulating into the economy. I don't think it's going to have a dramatic impact on GDP numbers, but naturally, when you have a shutdown, things, we're not having that type of money flowing through the economy, and we are a consumer-driven economy, it's certainly going to have a negative impact. But the thing is with the government shutdown is these folks are going to get their back pay, and that back pay should circulate back into the economy. So I think the second half of this year, the GDP numbers will look pretty good.
It was for a long time also.
Yes, it was. It was the longest shutdown in history, if I'm not mistaken.
And do you think it affects the states or the whole world?
Well, I think it affects, globally, we are a global economy, let's face it. And the U.S. right now is looked at as the strongest economy in the globe. And so indirectly, it certainly could have an effect globally, because if our GDP numbers slow down, then it affects everyone else's concern about a global slowdown. Because, if our economy goes into a recession, it'll probably bring the world down with it.
With everything going on, what's the economy going to look like for 2019?
So I think 2019 is going to show to be a pretty prosperous year in the stock market. I was on a panel of advisors, of 10 advisors at the end of December, and this was during the market correction that we were having, and they wanted to know my thoughts on what the S&P 500 would do. And I had predicted that we thought we would see at least a 12% growth rate on the S&P 500, and so far year to date, we're already at 11%. So coming into 2019, we were very optimistic. I think the concerns for a recession that we were hearing at the end of last year were overblown. So I think we see GDP growth rate between 2.25% and 2.5% for 2019, with a stock market that continues to be volatile. But I think the path to least resistance will be up, and I think it's going to be a very prosperous year for anyone that's investing in the markets this year.
And what about, so that's the SP 500. What about world markets in general? For example, I live in Ireland, and Brexit is a big thing where we are. The London Stock Exchange, the FTSE 100. Where do you see all that?
Well, I think that, and with Brexit, I think it's a big question mark, really. It's too hard to predict short term what's going to do there, because I think they're going to be very challenged in regards to trying to resolve Brexit in a manner that's going to satisfy the markets. Now, in regards to other international markets, I think China has had a real big struggle with their stock market over the last couple of years. It looks like it's starting to bottom out, and I think China could actually have a really good year in 2019 if there's a trade agreement signed with us and them in regards to the U.S. and China.
Very interesting. And what other markets are worth watching?
What other markets are? Well, frankly, I still think the U.S. is going to lead. So I think the U.S. is really going to kind of tell you what directions the overall markets are. I think the whole world looks to the U.S. right now because our economy is perceived as one of the strongest in the world. And another market to pay close attention to is the interest rate markets. The 10-year bond in the U.S. is about 2.75%. And the fear last year was rates would get too high. So I think if you follow the U.S. markets and follow the bond market, that's going to really tell you a lot in regards to what direction things are going to head in.
Very interesting. You're financially independent, Eddie, are you?
Well, I'd like to think so.
Perfect. So, Eddie, for somebody who's, interested in, investing in the stock market and all that, what advice would you give them to build their portfolio to become financial independent?
Well, I think the first thing they really need to do is sit down with a professional or someone that they trust, whether it's a family member or friend, and really sit down and write down what their goals are and how much money they need to maintain their standard of living when they retire. Once they have all of this information, then they can start building a strategy in which they invest every time they get the paycheck. A portion of their paycheck gets paid into some type of strategy that allows them to take advantage of the markets. And know and understand that when you're doing that, you're taking risks. You're going to have some really good years and really bad years. But if you stay the course and don't let the day-to-day fluctuations cause you to make knee-jerk reactions, and you have a long-term time horizon on your side, then you should do very, very well over the long haul.
Yeah, I've heard don't get your emotional high from the stock market.
That's right. Don't get too high, don't get too low.
Yeah, if you're doing it right, it should be boring almost.
Exactly.
So, Eddie, what about buy and hold? Do you agree with that?
So again, it depends on who you're talking to. I mean, if there's somebody who is, 30 years old, they're somewhat new to the workforce, and they're just going to buy an index fund, then yes, just buy and hold it, but just continue to dollar cost average into it. I think as you get older and accumulate more wealth, then being a little bit more active in your strategies and getting in and out of sectors can add some value to your portfolio. So I don't think it's one set answer for every investor.
So it kind of depends where you're at, what age, the amount of money you have to invest, what you're investing in, what your goals are.
That's exactly right.
And what do you mean by active strategy?
So active means that you are going to not buy and hold, that you're actually going to sell certain sectors, buy certain sectors. You're just more active in trading within your strategy.
And does trading give you it gives you more money to play with if it goes well, right? But it also gives you higher interest if you're buying and selling at the right time, is it?
Well, it could. You could also buy and sell the wrong thing too. So it doesn't guarantee it, but if you're more active, then yes, there are some opportunities for some nice upside in a portfolio if you're in the market. But I mean, again, I think you need to work with a professional that does it day in and day out, because it is a very challenging thing to try to do and learn on your own.
Yes. And what do you mean by, I'm going to go back to this as well, what do you mean by dollar cost averaging? What does that mean to the ordinary person?
So dollar cost averaging is when you take a set amount of money and you're going to invest it every pay period or every month, like just very disciplined in doing it. So this way, some people, what they'll do is when the market starts to go down, they get scared and then they stop saving. And then when the market goes back up, then they start saving again. And it's actually the reverse of what they should be doing, in my opinion. So dollar cost averaging is you're just disciplined investor. You're buying every single month, no matter what the market's doing. And it's proven over time to be one of the most lucrative ways to get yourself to financial independence.
And you buy every month to do that?
Correct.
Okay, very interesting. Okay. What other advice would you give somebody who's looking to become financially free?
Well, again, I think it comes down to putting together a financial plan for yourself with your goals on what you need or want financially, and then having the discipline to actually sacrifice and save some money every single month. Too many people get caught up in, more tangible type assets like buying a fancy car or having the fanciest clothes and wasting money in those areas where they could just sacrifice a little bit today for a brighter future. I think that will help them create a mindset and nest egg that they will be thankful they did years down the road.
Yeah, and if somebody's trying to teach themselves, where do you recommend they start?
You can go to, I would just Google investing. If you Google the word investing, you're going to see tons of articles on there. There's websites like my company's websites have lots of information. There's plenty of information and where to go. You can go to websites like Yahoo Finance, and there's always articles on there. So with the web today, there's plenty of areas where an investor can find information.
And what, do you recommend property, the stock? What about diversification and all that?
Yes, of course, diversification is a very important part of investing, and real estate can play a good role in that. And again, I think you need to work with a real estate professional, so that way you market and what you're looking to buy. You understand the rental market, the resale market. It's very essential to understand that before you make that financial commitment.
And what about precious metals?
Well, again, that's part of diversification. So some people are going to want to have gold and silver inside their strategies. As long as you don't have too big of a percentage in one sector, then I think as a investor, you reduce your risk drastically. And I think it's prudent to stay diversified.
Perfect, Eddie. And Eddie, you've got a book with tell us a bit about that.
Yeah, so my book is called The Common Sense Bull, The Keys to the Good Life Before and During Retirement. And it's really a book that is designed to simplify what it takes to be financially independent. One frustration I have today with all the information out there, sometimes it's a little bit intimidating for folks and they think it's this impossible task to become financially independent. And I really don't think it's a very difficult task at all, as long as you have the right information, the right mindset, and the right people around you. So this book stresses the core principles in doing that, some of the things we've already discussed on your podcast here today. And it also talks about risk management and understanding the risk as an investor that you're taking. So that way you hopefully don't put yourself in a position that you lose too much money when we have recessions and market crashes. So I'm hoping the readers will enjoy the book. It's easy to read. And more importantly, I think it's something that people can implement for themselves to achieve financial success.
And Eddie, when you say managing risk, what do you mean by that exactly?
Well, managing risk is knowing your portfolio inside and out and what risks you actually have. There's too many people out there that'll say, oh, I'm diversified. I have a bunch of mutual funds.
Mm-hmm.
Throw the word diversification out there very loosely, not understanding that maybe all of their mutual funds are tied to the same stock market and not as diversified as they truly think. So you need to have a risk analysis done of your portfolio so that way you can kind of stress test it and get an idea in regards to what your potential worst case scenario on the downside would be.
What do you say about fees? That's a big topic.
Well, yeah, I think everyone needs to know what they're paying in fees, because if you can save money in fees, that's more money in your pocket, and indirectly that increases your rates of return. So your fees should be disclosed to you. You should be able to see it in the prospectus of whatever investment you're investing in, and it's something that investors should know, but many times they don't.
And what about, you always hear the three factors. It's rate, time, and I can't think of the other one right now. But, can somebody invest at in their later years? You always hear the younger you do it, the better. What do you say to all that?
Well, obviously that's the case. If you start at a younger age, you don't have to save as much to accumulate enough money to retire. But if you wait till later in life, you put yourself in a vulnerable position financially, and then you got to play catch up. And anytime you got to play catch up, that means you got to save substantially more than what you would if you were younger.
But it's still possible.
Oh, absolutely. It's possible. When you look at the life expectancy today, people are expected to live in their mid-80s. So someone starting at 40 or 50 still has 30 plus years.
Yeah. Eddie, this has been amazing. How do people find out more about you?
So they can go on my website, which is keyadvisorsgroupllc.com. They can follow me on Twitter. My Twitter handle is @CommonSenseBull. And in those two areas, you can find a lot of information on myself as well as our company.
Thanks, Eddie. And what's that one thing you want to leave the listeners with?
So the one thing I want to leave listeners with is take the time to invest in yourself and find ways to hit your goals and surround yourself with the right people. I think if you can do that, then you'll be hit with some financial rewards that even you probably did not realize you could attain on your own.
Love that, Eddie. That's fantastic. Eddie, great to have you here, and thank you very much.
Thank you.
Hey everyone, remember to join us in the Private Financial Freedom Podcast Facebook group with me, your host, Lorna Poole. This is a safe haven of like-minded wealth-getting go-getters who, like you, are on their journey to creating financial freedom in their life. This is where you and I can get intimate. I can give you the support and guidance to go from where you are now to where you want to be, developing your wealth mindset and creating your financial freedom life. Join at www.facebook.com/groups The Financial Freedom Podcast. You will see the links to this on the website. It's in the show notes, or type it into the Facebook group. All you have to type in is Financial Freedom Podcast and you will see us there. Look forward to seeing you in the group. Take care. Thank you for joining us on the Financial Freedom Podcast to creating wealth, investing, and developing your money mindset. To get started today on your journey, head on over to www.lornapoole.com and grab your free course, 5 Steps to Breaking Free from Your Poverty Mindset and Accelerating Your Journey to Financial Freedom. See you there.